Hello, how are you? Very good evening. Yes, hearty welcome. Yes, keep coming. Yeah, very good evening, Akhil. Yes, hi, Anjali. Very good evening. Good. The days are passing by so quickly. The time is passing by. Time is flying. Yeah. Good. Chalo, keep coming, people. And we'll just solve those 4 MCQs that we left out yesterday. I think 11th one we solved, right? 12th भी solve कर देते हैं फटाफट. Let's complete this. Why वो भी क्यों छोड़ना? Yeah, just go ahead and complete. Revati had wages of $34,000 and her husband Jeevan's wages were $27,000. They have 3 children ages 3, 6 and 9. They paid a total of $6,000 to Creative Childcare School. Assuming a 20% credit rate, what will be their child and dependent care credit? Yeah, go ahead and answer. Yeah, hi Praveen. Very good evening. Yeah, people go ahead and answer. That's all. Maximum 2 kids. So 6,000 into 20%. 1200. Option A. Very good, Vishwa. Yeah, Neelesh. 1200. 2 or more, child limit 6,000 into 20%, right? So when you have 2 or more kids, obviously 6,000 is the limit, so 20%. Yeah, very good. So A is the answer there. Next. Yeah, Vimla's earned income for the year was $24,000. She paid $3,000 to a qualifying childcare center for the care of her 2-year-old son while she worked. She received $2,000 non-taxable income from social services to assist with her child care expenses. Compute Vimala's child and dependent care credit for the year from the following except for the child and dependent care table. Okay, you have the table. If the AGI is so and so but not over, then the percentage is so and so. Now calculate the AGI and then calculate the expenses, take the relevant credit and compute the answer. Go ahead. Good. Yes, that falls into 30% tax bracket. Yeah, because the earned income is 24,000. It falls into 30% tax bracket. 3,000 are the expenses, and 2,000 are the assistance that is received. So that's kind of reimbursed, right? So 3 minus 2 is 1,000. 1,000 into 30%. So 300. So A is the answer. Yeah. Yeah. Very good, Vishwa. She falls into 30% bracket. Yeah. Expenses 3k, assistance 2k, so 1k. 3k minus assistance 2k, so 1k into 30% is equal to 300. Option A. Then child and dependent care credit is $300. Good, Akhil. Yeah. Nilesh. 3,000 expenses minus 2,000 assistance received. Yeah. So 1,000 into 30% is equal to 300. Very nice. Very good. A is the answer. Yeah. Good. Chalo. Next one. A spouse who is either a full-time student or not able to care for himself or herself is treated as having earned income of which amount? A, B, C or D? Check which one is the right answer. Yes, yesterday also we did this question. Yeah, 3,000 by 12 is 250. 6,000 by 12 is 500. For one kid, it is 3,000. For two kids, it is, two qualifying person, two or more qualified person is 6,000. So by 12, it is 500, right? So D, both A and B. Yeah, very good, Vishwa. Good, Nilesh. Good, Akhil. Very good. Chalo, the last question in this. A taxpayer with one child earns 24,000 a year. He pays work-related expense of 2,900 for the care of his 4-year-old child and qualifies to claim the credit for child and dependent care expenses. His employer pays an additional $1,000 under a qualified dependent care benefit plan. What amount of work-related expenses can the taxpayer use to figure the child and dependent care credit? Go ahead. Yes, very good. Lower of expenses or dollar amount. Employer paid 2,900 or 3,000 minus that 1,000 that was paid, under the qualified dependent care benefit plan. So 2,900 or 2,000, whichever is less. So option B. Good explanation. Yeah, Anjali Mishra 2,000, Nilesh, good, 2,000, Akhil 2,000, very good, fine, okay, yeah, yes, nothing is worse than missing an opportunity that could have changed your life. Perfect. Okay, just give me a moment, stay tuned, I'll be Let me bring up the next topic here. Wait a moment. Yes, so let's get started with adoption credit. Fine, good. The excess of the taxpayer's adoption credit over the amount of the taxpayer's federal income tax is what? Cute, no? The kid is cute. Yeah. Go ahead. The excess of the taxpayer's adoption credit over the amount of the taxpayer's federal income tax is what? Go ahead. The excess of a taxpayer's adoption credit over the amount of taxpayer's federal income tax is not refundable. Right? Is not refundable. Is lost? No. It's not lost. It can be carried forward, right, up to 5 years. Then is refunded to the taxpayer? No. Then cannot be carried forward? No, it can be carried forward. Okay, so first one is the right answer, because Akil, excess amount is not refundable, but unused credit will be carried forward for the next 5 years. Very good. Yeah, chalo. So, and then Vishwa, can be carried forward. Okay, you didn't mention the alphabet here. Yeah, fine. So is not refundable. A is the right answer. Fine. Next one. Taxpayers may be able to take an adoption credit for qualifying expenses paid to adopt a qualifying child. With regard to the adoption credit, which of the following statements is true? Good. For the current year, the amount of the adoption credit is up to $20,000 maximum per taxpayer per tax year. For purposes of adoption credit, an eligible child is any individual under 16 years old or physically or mentally incapable of caring for himself or herself. Next, if the child is not a US citizen or resident at the time the adoption process began, taxpayers cannot take the credit until the adoption becomes final. Then the adoption credit is a refundable tax credit. Which one do you think is the answer? Go ahead. Chalo. For the current year, the amount of adoption credit is up to 14,300, right? 14,300 or so per taxpayer. That's the maximum, right? Like second. Just a second, please. For the current year, the amount of adoption credit is up to 14,300 per person, right? Next, for the purpose of adoption, so A is wrong. Okay, next, for the purpose of adoption credit, an eligible individual is any individual under 16 years of age. No, it is under 18 years. Next, see, if the child is not a US citizen or resident at the time the adoption process began, the taxpayers cannot take the credit until the adoption becomes final. Absolutely, right? Only when that adoption is legal, right, and it's approved, only then the taxpayer can go ahead and claim that. Next, the adoption credit is a refundable tax credit. In the first question also we saw that it's not a refundable tax credit, right? So let's see, if child is not a citizen or resident, TP cannot take the credit until the adoption becomes final. Option C. Perfect. And vice versa, if a child is a citizen or resident at the time of adoption, TP can take the credit even if the adoption is not final, right? So very good, important. Next, Nilesh Kumar, good. Anjali, good. Sumit, good. Chalo. So C is the right answer here. And ever tried, ever failed? No matter, try again, fail better. Okay, stay tuned. Let me bring up the next topic for you. education credits. Yeah, I wish we also had a credit for this EA and all. इतना jobs create हो रहा है. Yeah, I don't know. Government, we should become government. Only then these half-crooked minds will understand what's the beauty of this education. Anyways, what education credits are available to taxpayers? Go ahead. Good. American Opportunity Credit and then Lifetime Learning Credit. Hope Credit is no longer available. Yes, Nisha, good. Nilesh, good. So, easy topics, so we'll go a little fast. Yeah, Mamta and Jagan file a joint tax return. Their dependent Anu was enrolled full-time in college in 2019 and dropped out of college in 2020. Mamata and Jagan obtained a personal loan in 2018 and used the proceeds to pay for tuition and related fees in 2019. The loan was repaid in 2020. Which year will they be entitled to claim an education credit? Go ahead. right? Credit for the year in which TP paid the expenses, right? Not when the loan was repaid. See, these years can change, so whenever you are watching this, understand the concept, because sometimes what happens, even you may have to prepare the amended returns. Okay, so you must make it a point, that you understand the concept and apply. Oh, if it is for 2018 year, I can't do it. It cannot be like that, right? You must be able to do it for any year. Yeah, apply the concept. Yeah, in the year 2019 he enrolled, so claim it for the year 2019. Yeah. No. Oh, okay, fine. 2019. Alphabet. Sumit. Samalke. Then D. In the year the expense were paid, in that year only the credit will be claimed. Right. Good job. Fine. Next. Third one. Generally, a taxpayer may claim an education credit if certain requirements are met. Which of the following is not a requirement? Go ahead. Taxpayer pays qualified tuition related expense of higher education. Taxpayer pays qualified tuition and related expense for an eligible student. Taxpayer and student have modified AGI under certain limits. The eligible student is either the taxpayer spouse or a dependent for whom the taxpayer claims an exemption on his tax return. Which of the following is not a requirement? Not. Go ahead. Okay, so taxpayer pays qualified tuition related expense of higher education, right? That's the right answer. That's the right statement. Taxpayer pays qualified tuition and related expenses for an eligible student. Yes, that's also right. The taxpayer and student have modified AGI under certain limits. Why does the student come into picture? Yeah. Why does that matter? So C looks like, that is the wrong statement and the right answer. Now let's take a look at D. The eligible student is either the taxpayer, spouse, or a dependent for whom the taxpayer claims an exemption on his tax return. Perfect, right? So C, TP, AGI considered and student dependent claim. Your thinking is right, Nisha. Taxpayer and student need not have modified AGI. Taxpayer who is claiming education credit must have modified AGI under certain limits. So option C. Very good. Anjali. C to claim the credit, the AGI should be under the limit. Very good. Nice. Chalo. Okay. So C is the right answer. Let's move to the next question. Yeah. Which of the following would not disqualify a taxpayer for taking the American Opportunity Credit? AGI, taxpayer taking deduction, taxpayer claimed as dependent, or taxpayer files MFS. Which of the following is not a disqualification to claim that credit? Go ahead. Okay. The single taxpayer has modified AGA of 85,000. I told you, for the examination purposes, until the exam is done, just remember these Maggie. Maggie khao aur ye Maggie yaad rakho. Okay. So for single taxpayer, it is 80 to 90,000. That's the threshold limit. So 85,000 is safe. So that's not a disqualification. Okay. Now B, taxpayer is taking a deduction for tuition and fees on form 1040 for the same student. Obviously, you can't take for the same student for the same expenditure American Opportunity Credit and also tuition and fees reduction, right? Two things for the same person? No. Obviously that will disqualify. Okay, so B is a wrong statement. Then it will definitely disqualify him. Then taxpayer may be claimed as a dependent on someone else's tax return. Obviously, if you are already claimed as a dependent on someone else's tax return, then why would you be allowed this one, right? Yeah, system is more fast than me. Then the eligible student is either the taxpayer spouse or a dependent for whom the taxpayer claims an exemption on his own tax return. Obviously, this will also disqualify him, right? Okay, so A is the right answer. I think people have given the right answer. Yeah, option B, C, D will disqualify to claim American Opportunity Tax Credit. Option A will only reduce the amount of credit as Maggie is more than 80k. Option A, yeah, 80 to 90k partial deduction may also qualify, right? Very good, very good. So which question are we seeing? Fourth one, right? Sorry, I took a jump here. Yeah, right. Yes, I'm sorry. Yeah, A. A is safe because 80 to 90, so 85,000. Yeah, maybe he will qualify for a partial credit. Next one, A. Yeah, qualify, but in phase out range, yeah, B, C, D will disqualify. Right, perfect. Chalo, next question. Ramesh paid his educational expenses at a community college where he completed his freshman year and began his sophomore year. His father Prasad provides more than half of the support for Ramesh and claims an exemption for him on his tax return. Which of the following statements is correct? Go ahead. True. The moment you read that line, his father Prasad provides more than half of the support for Ramesh and claims an exemption for him. So the moment you see more than half of the support and then claims an exemption for him, baat khatam. Prasad qualifies to claim. That's all. So B is the right answer. So neither may take a credit, then Ramesh is eligible. Both will split that. I mean A, C, D, wrong. So B is the right answer, right? Chalo, good Anjali. Good Nilesh. B. Prasad is eligible. Ramesh is dependent and claimed by Prasad, right? Nisha. Prasad paid more than half, so B will be the answer, right? Vishwanath, right. Prasad is eligible to take American Opportunity Tax Credit as Ramesh is dependent, and any expense paid by Ramesh is treated as amount paid by Ramesh if he is claiming him as a dependent, right? Perfect. Very good. Chalo, so B is the answer. 40% of American Opportunity Tax Credit is refundable, right? $2,500 for qualified education expenses per student. Good. Take up the next question. Lahari is a sophomore in the University of Ohio's degree program in dentistry. During the year, Lahari paid $3,000 in tuition, $500 for books, and $250 for rented dental equipment. Lahari also paid room and board of $3,500. What is the total qualifying educational expense for Lahari for the purpose of American Opportunity Credit or the Lifetime Learning Credit? Go ahead. Yeah. Room and board expenses are not qualified, right? So 3,000 plus 500 plus 250, 3,750. C is the right answer. Good, Vishwa. Only for 529 plans. See, are you observing, Vishwa's attention to detail? Vishwanath is already an enrolled agent. Yeah. Still, he is practicing the questions. Give those attention to detail. Yeah. That's what will help you. Good, Vishwa. Chalo, Sumit. Yeah. Nilesh. Good. Chalo. Let's take up the next question. Kaveri is single and works full-time as a nurse assistant in a hospital. Her modified AGA was $32,000. During the current tax year, she enrolled part-time in nursing school and took half the required course load for a full-time status. Her tuition was $4,000. As part of her employer-provided educational assistance, her employer reimbursed her for $1,000 in education expenses. What is the amount of her qualified education expenses? What is the amount? Go ahead. Yeah, that's all. 4,000 expenditure, 1,000 was reimbursed. 4 minus 1, 3. So B is the answer. Yep. Yeah, Nisha, good. Right. Good. Good. So B is the answer. Net tuition fees minus employer assistance. That's option B. Chalo. Next one. 8th. Madhav paid 3,900 for his son's tuition this year. What is the maximum potential amount of his American Opportunity Credit? Go ahead. Good. Yes, see, 100% credit for the first 2000 plus 25% of the next 2000 expense of per student is claimed. So here 2000 into 100%, 2000 plus 1900 into 25%, 475. So 2475. Very good. Good, Anjali. Good, Nilesh. Same. Yeah. 2000 plus 475, 2475. Yeah. Very good. So C is the answer here. Yeah. Chalo. Next one. Fatima paid $1,600 for her son's tuition, qualified education expenses during the year. Fatima's modified AGI is 68,000. What is the amount of her American Opportunity Credit for these expenses? Go ahead. Yeah, this is for the previous question, Vishwa. Good. Sometimes, if your internet is also slow, or if you responded slow, then it will take a little time for you to for me to publish that answers. And also, in case you've given it wrong, I don't trigger that option here. I don't want to hurt you. Yeah. But anyways, you are learning, what is the right thing to do. Yeah. Go ahead. Yeah, 100% of that first 2000 or whatever was paid, whichever is less, right? So 1600. Yeah. Then Nilesh, yes, first 2000 up to 2000 into 100%, so up to 1600. So take complete 1600 into 100%. Yeah. Anjali Mishra, right? Yes, perfect. So next one, 10th one. Bhargav and Kavita are married and file a joint tax return. They claim an exemption for their dependent daughter on their tax return. Their Maggie is $60,000. Then their daughter is a full-time student and a 4th year senior of studies at the local university. They have only claimed the American Opportunity Credit for her in 3 earlier years. Bhargav and Kavita paid qualified education expense of $3,500 during the year. They meet all of the other requirements. Figure the allowable American Opportunity Credit. So, go ahead. Yes, this is just like the previous question. Yeah. Yeah. Option A. Yes. Yes, 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 yes. Yes, 100% of 2000 plus 25% of the next 1500, right? 2375. Good, Vishwa. Nilesh, yes. Yes, Anjali. Yeah. Next one. Okay, so A is the right answer there. Now, American Opportunity Credit Limit is. I don't think you need that much time. Go ahead. Bol the answer. Just type the alphabet, that's enough. Yep. 2500 per student per year. Yeah. And lifetime learning credit. Always it goes limited liability company. LLC. LLC is $2,000 per return. Yeah, lifetime learning credit. Yeah. Okay, let's take up the next question. James, a maths teacher, is single and will take a 3-month sabbatical during the tax year. Then, during the sabbatical, he will take 3 specialized courses in advanced mathematics from Cornell University at a cost of $8,000. His modified adjusted gross income is $40,000 and his tax liability is $4,000. He plans to claim the lifetime learning credit. How much can he claim as a credit? Good. Lifetime learning credit. Yeah, 20% of the first 10,000, right? So 20% into 8,000 is the expense here. So 8,000 into 20%, 1,600, right? Vishwanath also 20% credit up to $10,000. So 20% on qualifying expense of 8K. So 1,600. Option B, right? So B is the right answer. Okay, next. Which of the following individuals is eligible for the American Opportunity Credit? Leela, who is taking a ceramic class. Farooq, who was convicted of a felony. Bahadur, who is taking at least one half of the normal full-time course. Julie's son Paul, who is enrolled full-time as a PG student. Go ahead. Yeah. Okay, C. Bahadur, who is taking at least one half of the normal full-time course load required for the Computer Science Associate's degree program, attending classes the entire school year. Right, C is the answer. I'm looking at your responses. Yeah, option C, Bahadur, who is taking at least one half. Paul, no, as OSTC is not for post-graduation. D. Julie's son Paul does not qualify for American Opportunity Tax Credit. Yeah, because American Opportunity Tax Credit is not for post-graduation. Yeah. Next, Farooq is also not qualified for AO credit because he was convicted of felony. Then Leela is not studying full time. It's just a ceramic class. I mean, one of the courses that she has taken. Yeah. So 1, 2, and 3. A, B, and D do not qualify. Okay, good. C is the right answer. Anjali Bahadur, because Leela taking class does not lead to degree. Leela taking the class does not lead to degree. Yeah. Julie pursuing master degree is more than 4 years, and Farooq should be free from felony conviction for posting or making the claim. Right. Perfect. So C is the answer. Good. Okay, regarding the American Opportunity Credit, which of the following statements is false? The student must be enrolled in a program that leads to a degree, certificate, or other recognized educational credential. The student must take at least 1/2 of the normal full-time workload for the purpose of study for at least one academic period beginning the tax year. Next, the student must be free of any felony conviction for possessing or distributing a controlled substance. Next, the student must be enrolled in the first 4 years of post-secondary study as of the beginning of the tax year. Good. Enrolled in the first 4 year, not necessary. Student can be enrolled in the first year itself, right? Good. D. Next, Akhil, for the purpose of American Opportunity Credit, the student must be enrolled as a student in the first 4 years of post-secondary study as of the beginning of the tax year, right? The rest all are correct. The program should lead to a degree certificate, then at least one half of the normal full time, at least one academic period. Then he must be free from any felony conviction and things like that, right? So D is the right answer. So next, 15. The lifetime learning credit is different than the American Opportunity Credit. However, they do share some of the same requirements. Which of the following requirements pertains to both education credits? Expenses related to non-credit courses are allowed as qualified education expenses. To be eligible for either of the education credits, taxpayer must use any filing status other than married filing separately. There is no limit to the number of years the credits can be claimed. The credits are available for only the first 4 years of post-secondary education. Which one? Go ahead. Which one pertains to both education credits? Perfect. Married filing separately, so no dishum. Right, MF is not eligible for both American Opportunity Credit and then Lifetime Learning Credit, right? Yes, right. Yes, to be eligible for either of the education credit, taxpayer must use any filing status other than. Perfect. Sure. Next one. Which of the following is the same for both the American Opportunity Credit and Lifetime Learning Credit? Good. Amount of credit is determined by the amount a taxpayer pays for qualified tuition and related expense, right? We have seen that first 100% of the first 2000, then 25% of the first 2000 American Opportunity Credit, and then again for lifetime learning credit we said that 100% of the first or 20% of the first $10,000 and things like that, right? So obviously based on the expenses the amount of credit will also change. But D, amount of credit is determined by the amount a taxpayer pays for qualified tuition expense. The amount A, if you see maximum amount of credit, yes, that's different for AOC and then LLC. Then application of felony drug conviction rules, that's applicable to AOC but not to LLC. Number of years the credit is available, it varies from AOC and LLC. Okay, so D is the right answer. Fine. So let's go to the next question. Which of the following statements is incorrect regarding the education tax credits? Go ahead, give it a read. Right. Enrolling in full time is not necessary, even if you enroll for half of the year, but for one full academic period, that's it. Courses to acquire or improve job skills are allowable for LLC. A is right. B, 40% of AOC may be refundable. Yes, right. C, first 4 years of post-secondary education, that's also right. So D, saying that student must be enrolled full time, that is wrong, because only at least half of the year, that's enough. At least half time, right? Anjali, D, Akhil, right? Must be enrolled at least half time in a degree program. Chalo, good visual. Chalo, next one. Ganesh paid 3,000 for his daughter's tuition last year. What is the maximum potential amount of his American Opportunity Credit for her expenses? Chalo, go ahead. Yeah. 2250. How did we arrive at that? 100% of first 2000 into 25% of the next 1000, right? So 2250, option A. Very good, Vishwa. Right. And 40% of this amount is refundable. That is 900. Yeah. Nilesh, 2250. Yeah, 2000 into 100% and then 100 into 25%. Yeah, right. Perfect. 2250. Very good, Akhil. 100%. Yeah. Very nice. Very good. Chalo. Next one. Samir and Sneha are married and file a joint tax return for 2020. They claim their daughter as a dependent on their tax return. Their modified AGI is $170,000. Their daughter is in her second year of studies at the local university. They paid $4,400 in 2020 for her tuition costs. Samir and Sneha are allowed an American Opportunity Credit of how much? How much? Go ahead. Little maths is involved here. Yeah, for that MFJ, the Maggie limits, they fall between 160 to 180. Now here it is 170. Okay, so we have to take that proportionately. So as we mentioned, now 160 to 180, that is 20,000. Take that into denominator, and then 180, right? 180 is the higher end, but here it is 170. So excess of 10,000. So 10,000 by 20,000 into the 2,500. Yeah, that is 1250. That is 1250. Yeah, I mean, mentioning that, is also in the calculation. I understand that. Yeah. Yeah, 2,500. Right. Good effort, Nilesh. Akhil also. Yeah, very good. 1250 B. Very nice. 2,500 into 10 by 20. Okay, let's take up the last question for today, and with this we will close. Bobby is a full-time student and a 5th year college senior. Assuming all other requirements are met, Bobby is eligible for which education credit? Go ahead. Yeah. Yes, AOC for the first 4 year after post. LLC, okay. AOC for the first 4 year after post secondary. What did you mean by that? Yeah. Answer is LLC, as he is not in first 4 years of post secondary education. Yeah. Okay. Chalo, good. Obviously, because the American opportunity is only for the first 4 years. Now he is in the 5th year of college and college senior. Yeah, as he has mentioned, LLC is for unlimited number of years. AOTC is only for 4 years, right? Good, Akhil. Yeah, lifetime learning credit is the answer. AOC is not eligible because he is in the 5th year, and if not eligible AOC, then lifetime credit, and the lifetime credit, then American opportunity will come into picture. Okay, anyways, what I understand, just take the first part. Okay, he is in the 5th year, and AOTC is only for the 4 years, right? So because he is in the 5th year, and LLC, I mean lifetime learning credit, is for unlimited number of years. Okay, so go with A. Okay, fine. तो आज के लिए हम यहाँ पे रुकते हैं, and I will see you tomorrow. Yeah, and I also request you to please like and subscribe to iLead Tax LLC also. That's something, for our clients that I do, but still, as my students, I want you to watch even that content, some half an hour or so, just just kind of refreshes your knowledge and all. Okay, so take care. I'll see you tomorrow. Yeah, good night. Bye bye.